everybody, what's up? It is Monday, November 16th. I just sent out the new edition of MMT Trader. If you want to get a copy of that, go to my website, pitbulleconomics.com. All right, market up today. We're getting very close to 30,000 on the Dow. That's going to be taken out. So let's refresh. Last week, I said that the correction was canceled. Fiscal flows are just too strong. You know, I had been anticipating a big surge in bullish sentiment. We actually saw that in the most recent American Association of Individual Investors survey when it came out on Wednesday. We saw, and I talked about that, we saw a huge, as a matter of fact, I went back for a number of years. I could not find a single week with that magnitude of an increase in bullish sentiment. I mean, it was really, really amazing. So now we are at the highest levels of bullish sentiment since January 2018. Bearish sentiment is the lowest it has been since February, I believe it's February of this year. Okay, so that is not extreme low, but it's low and it's below the historical average. But here's the thing. I mean, the fiscal flows, the fiscal support is just, it's too powerful. It's too strong. So while, you know, we have this environment now of a very positive sentiment, very bullish, and like if you're a contrarian, you would look at that and think, hey, you know, I want to go against that. We had all this year people very negative and pessimistic, investors staying away from the market. I kept saying, you know, that thing is going to go up, that thing is going to go up, the market's going to go up, bullish sentiment's going to go up. Both things have occurred. But the fact is, the fiscal support is just enormous. We're up 170 billion over the same time last year. If you look at tax flows, which is another thing, you know, that's another element in the fiscal picture, right? You have the spending and you have the taxation. Tax flows, which are actually a very good indicator of economic activity, right? When economic activity expands, government ends up collecting more taxes. And we saw corporation income taxes kind of plateau out in the period from like late October until early November, and now they're just taking off again. They're shooting way up. So, you know, the COVID situation is a bad situation, but when I look at these numbers, it's telling me that the economy is hanging in there. And as a matter of fact, it may even be accelerating. So the market move is totally justified. And I think what we're going to see is we're going to see bullish sentiment rise to very high levels and be sustained at high levels. And really the only thing that I can point to at this time, insofar as the risk of a correction, would be a slowdown in these fiscal flows, or maybe, you know, some really extreme level of bullish sentiment. And even that, if it's just about sentiment, you know, then you're only going to get a correction. You're not going to get the end of the bull market. I mean, the end of the bull market will come about as a result of some policy change. And that, you know, that's something that is potentially out there. I mean, if you look at Biden coming in as president, his history as a fiscal conservative, who he's bringing in on the economic side, but all that still has to kind of, you know, play out. We don't know exactly what policies are going to be proposed. Look, he's talking about raising taxes on people making $400,000 a year and above. But, you know, if you raise taxes on one segment and, you know, you increase spending and cut taxes on another segment, I mean, the net result might be additional fiscal stimulus. So we really got to see how these numbers come in, and it's way too early to make that call. I mean, I see some Wall Street banks making the call already, but I don't see how you can make the call. I mean, we don't know what the final policies are going to be. Don't forget, you got a Republican-controlled Senate, most likely. I mean, that's the way it's shaping up. So we don't know. No sense to jump the gun. I mean, when we know, we know. But right now, and by the way, I had one day last week on Thursday where I said it looks like a correction, and then I immediately, when I saw the fiscal numbers, I'm like, you know what? That's not happening. We're just going to keep going up. So Dow 30,000, folks, you're not getting this anywhere else. I mean, my approach, the understanding of MMT, the application of MMT towards the financial markets, in terms of understanding policy on the financial markets, understanding how these flows affect. I mean, if you're following mainstream or Wall Street economic analysis or market analysis, I mean, it doesn't compare to what I do. So do yourself a favor. Go sign up for my report, MMT Trader. I'm the only one who does this, has an applied approach to MMT. I've said that. Trying to let you guys know that, this is a unique approach. This is the most concise understanding and correlated to the markets and investing. I mean, a lot of MMT academics out there, and that's great, and they're writing papers and they're giving speeches, but nobody that has put together an applied approach. I have it right here. So check it out, pitbulleconomics.com. Sign up for a 30-day free trial. The dollar is in a downtrend. It's a slow downtrend because, as I said in the past, the Fed's monetary policy right now is actually supportive for the dollar. So you have, you got fiscal policy, you got the trade deficit negative for the dollar. Those are the overriding factors, but asset purchases by the Fed, low interest rates, it's actually bullish for the dollar. So the trend is down. You just got to keep selling rallies. I've been telling you that. I've been telling you that for years. And it's a slow declining trend. I mean, that's the way it's playing out. You just have to, if you have patience, if you sell rallies, if you build a position, you can make a lot of money. All right, go to my website, pitbulleconomics.com. See everybody tomorrow. Bye-bye.